It's Thursday, March 27th, and welcome to your Stock Market Daily News podcast, giving you the top market movers and financial headlines in under 2.5 minutes. On Wednesday, the S&P 500 posted its sharpest drop since January. The Dow Jones fell as well, and the Nasdaq ended in the red. Global markets felt the heat, with energy and geopolitical tensions driving the narrative. Our lead story, oil and the broader energy sector, remain front and center as the war in Iran flares up and worries about global supply ripple through every market. Plus, a seismic move may be on the horizon for private space travel as new reports emerge about a potential SpaceX IPO. Let's break down what every investor needs to know. First, stocks slid sharply midweek as President Trump extended a pause on striking Iranian energy infrastructure. Hopes of a truce faded and oil surged past $101 a barrel. The S&P 500 fell nearly 1.2%, its steepest daily loss in months, and volatility spiked. Investors are recalibrating portfolios for a riskier environment as U.S. Gulf commitments grow and nearly 50,000 U.S. troops are now tied up in the region. Portfolio implication: expect continued volatility, especially in energy and defense names, until clear de-escalation emerges. Next, Goldman Sachs analysts doubled down on 3 energy stocks they believe have upside in a disrupted energy market. Cheniere Energy, Venture Global, and Golar LNG are all flagged as top picks to benefit from tighter global gas balances. For example, Cheniere posted a 12-month return of 22%, with Goldman projecting another 9% upside. For investors seeking an energy hedge, LNG players with flexible capacity and robust contracts are worth watching as global prices remain elevated. On the tech front, AppLovin, ticker APP, tumbled 8% Thursday morning. Short sellers circled as insiders executed more than 150 selling transactions in 3 months, stoking concerns about competition in AI-driven advertising. The stock is now down 35% year-to-date, despite blockbuster earnings and expanding free cash flow. Bulls argue the company's Axon 2 engine is fueling historic profitability, but volatility remains high as traders debate whether the pullback is justified or just panic selling. In dividend news, Pfizer's high yield, now at 6.3%, is catching attention and some concern. In fiscal 2025, the company paid out more in dividends than it generated in free cash flow, raising questions about payout sustainability. With total debt rising to over $67 billion and liquidity tightening, dividend safety is in the spotlight. Pfizer's next earnings call in May will be crucial for income investors, especially those depending on reliable healthcare dividends. Shifting to international markets, Australia's ASX 200 closed down 0.1% as Iran's rejection of truce talks hit risk sentiment. Energy stocks bucked the trend, gaining more than 1%, while technology and mining names slumped. Meanwhile, Cyclone Narelle forced closures at vital LNG and iron ore ports in Western Australia, adding another layer of supply chain risk, just as global commodity markets are on edge. To recap, U.S. markets tumbled Wednesday, with the S&P 500 leading declines as energy prices spiked and Middle East tensions escalated. Pharma dividend safety, short seller pressure in tech, and opportunities in energy are setting the tone for the end of March. Looking ahead, watch for upcoming earnings reports from major healthcare and tech firms, fresh inflation data, and signs of any diplomatic breakthrough in the Gulf. That's your market roundup for March 27th. For daily updates, hit subscribe or follow us where you get your podcasts. Stay sharp, stay informed, and we'll see you back here tomorrow.